So there's this question ki why is gold price increasing despite the dollar yield and dollar index increase? Is it indicating a major economic crisis or the Fed rate cut or Middle East tension or China buying gold news? See, there are a lot of factors which impacts things like interest rate, gold prices, oil prices, forex reserves kaisa hai, what is the demand supply of the currencies and all. There are too many factors involved to be able to forecast exactly one factor. In the short term, there are too many variables to evaluate, but in the long term, there are too few variables to actually evaluate. The forecasting would be much more accurate if you're looking at a longer term horizon. In the long term, how do I see gold? And the short term, how do I see gold? So I had also bought a bit of gold, but only 40-50% of what I wanted to buy at that time. Few months back, I was waiting and seeing, and then I wanted to add more gold. I've bought sovereign gold bonds and ETFs. So ETFs is predominantly for liquidity, and sovereign gold bond is because of the tax consideration, as well as it gives you that interest on a per annum basis, 2.5% or so. So that is the reason. So that's more or less a 50-50 mix, if I were to say. And I bought some silver ETF also. So each of them in the last 3-4 months is up 10%. It's not my contribution. That is how people will say, but that is not my contribution because I did not know that exactly in 3 months and these many days it is going to give you a 10% return. That I did not know. Nobody knows. People lie and they try to show too much of themselves. What happens is in a long-term 5-year, 10-year horizon, because even the sovereign gold bond that I've bought is maturing, let's say 5 years or 6 years ahead, most of them. When I'm looking at that, there are too many factors involved. So one, inflation is going to be there. Interest rates are relatively on the higher side today, so it is going to be on the lower end in the longer term. If not today, I don't know whether the rate cut will happen today or not. But in the long term, yes, rate cut will happen. Inflation in the US will become much better, as in lower as compared to what it is today. So the long term things are going to be relatively better, right? Whatever be the crisis. And also it's a part of the asset allocation of my portfolio. So of my portfolio, I wanted to have like a 5%, and I never count jewelry in terms of my investment portfolio. Jewelry is my asset. It's an appreciating asset, but that is my asset, but not an investment asset, right? Because on the returns of jewelry is something which is, when you have absolutely nothing left in the worst case scenario, you sell it to feed for yourself. So that is that kind of an asset. And that is how I want to treat it. It is not something that is going to be, my investment asset, this is my target, financial freedom or whatever people talk about. There you don't include gold. You can include your real estate as in your house. How can you include that? Simply by considering whatever is the value of the house is not the concern in your investment portfolio. The concern is that because you have your own house, whatever be the value of the house, you will not have to calculate the rental expense in your total expense required. So when you're calculating these things, that what is the amount of your financial goals, etc., when you're doing that calculation, that this is the amount of money I want per annum, so as to be able to take care of my lifestyle expenses. In that lifestyle expense calculation, if you have your own house, you do not include rental expense. So that is the job of your house that you're staying in. It is an appreciating asset. Ideally, in normal circumstances, the appreciation rate might be very low. We are not getting into that discussion, but it is not an investment asset per se, which will take care of my expenses. My rental expenses not there now because I'm living in my house. Tell me, are you understanding this? So in the short term, there becomes too many variables with regards to gold as well when you're evaluating. Now, you don't know what will be a war situation tomorrow. What could be the situation with respect to maybe a duty on gold or something. Although that seems a little unlikely because we've got a decent amount of forex reserve. You don't know what quantity of gold might get discovered or something. There are a lot of variables that is involved. So you cannot exactly pinpoint and comment. But yes, when we're looking at interest rates and all going down, normally people, when interest rates are high, you want to put your money or invest your money in markets and all in order to earn that interest if the rate is high. If the interest rates are very low, you might as well want to hold a little more of gold because there is going to be appreciation in the real value. So there are a variety of reasons. Whenever there is an emergency or crisis situation, people want to go for gold. Second, I feel that currency keeps on losing value, especially because people print currency, but you cannot print gold as such. So therefore, I feel that gold has got some real value. So a very small single-digit percentage of my portfolio, I would want to keep it as gold. Let's say 5-7% of my total portfolio, 7% or maybe I'm trying to keep like an 8-9% right now because I'm planning to invest more in equity. If I do more equity later, automatically the percentage allocation of gold comes down. So a lot of factors you think about before you decide as to why gold is going up or going down. So you keep on reading, you keep on understanding that these are the things happening, these are the factors. Because if, say, for example, you have 10 factors, you can have so many permutation and combination of those factors today. Suppose each of the factors has got 2 options, increase, decrease. So you'll have 2 to the power 10 permutation combinations possible for those 10 factors which result in gold. So you see, okay, these are the kind of factors, this is the accumulation of factors today, and this is what is happening to gold today. 2 years later again you see, acha, these are the factors, now this is the market situation today, how gold is trading today. That's how you build your story and your experience over the years. So you need to start understanding things.